What's up, everyone? Welcome back to the series going over how in the hell can we achieve consistency and make money trading options. Today's video will go over indicators. Now, I'm not the biggest indicator fan out there. However, I do think they can be helpful when used correctly. No matter what indicator you use or choose to use, they should be used to add confluence and conviction to a play. A reason why I'm not the biggest fan of indicators is because almost all of them are laggards. The only thing that isn't going to be a laggard is simple price action, and my favorite of them all, VPA. I'll get into VPA here in a minute. But I do use some indicators along with that, those mainly being the 9, 20 EMA and VWAP. I'll get into those because I do use them in different ways. When I first started trading, I threw every single indicator known to man on my screen. You know, if I click here on this indicator, originally when I first started trading, I was throwing all these on here looking for some reason to buy into a play or to get into a play that I would hope and make money. And you know, the simple truth behind it is price action is what makes you money, and understanding the psychology of buyers and sellers, because that is what moves the market. All right, so let's get into the 9/20 EMA, and I'll kind of explain why I don't like indicators as much as well. So if I throw these on here, right, and I do not have extended hours on, we notice how these are going to change if I throw extended hours on. That's a lot of variables. One person may be using EMAs with on, one person may be using them with it off. So there's a ton of variables there, and they're also laggards. If I switch this over here to extended time, these look a little bit different. But if I flip here and then go to the 15, they're also going to be different. I do like EMAs better than standard moving, just because as you know, day trading, they take those previous 9 or 20 days in this case into account, as opposed to days that are further out. And because of that, I think it helps a little bit with the laggard sense, but not fully. And that's a big reason why I really don't like indicators. But how I do use these is I like to throw my extended hours on. How I do like to use these is for intraday trend. So in this case, I have my 20 EMA in green, my 9 EMA in red. The shorter EMA or shorter time frame EMA is underneath that longer time frame, indicating a bearish intraday trend. On the flip side, if I have my 9 EMA or the shorter time frame over or above our later time frame EMA, that indicates a bullish intraday trend. Holy shit, I cannot talk. All right, but the big reason why I like to use EMAs to give me a visualization period, holy shit, is I want to see some separation between our EMAs. This helps me to determine where price can move a little bit faster. In this case, we have some decent separation in here. We notice not very much separation in here. Price is moving slower. Same thing here. We don't have separation between our EMAs. Price is moving slower. Once we get this separation, boom, moves up. The next indicator I'll talk about is VWAP. It's a very commonly used indicator, and it can act as key support and resistance. So I do think it is decently valuable. But again, what I like to see is separation among EMAs and VWAP, helping me to decipher where a bigger move could potentially come into play. Get too in-depth on VWAP. That's how I really use it. Sometimes I don't even throw it on, but some institutions do use VWAP. A lot of retail traders use VWAP. So it is one that can be a big support or resistance level. Lastly, my baby, the indicator, VPA, or volume by price here on TrendSpider, is my absolute favorite. And how I like to use VPA is these nodes where we have further sticking out here on the side. This is our volume profile or VPA. The further sticking out nodes is where price is going to move slower. Price will move faster in between big node to big node. So if I look here, price will move faster in these zones, but slower down in here. where we are further sticking out. This helps me in preparation for the day. I can see where big play potential is or where key levels are. This helps me identify how important those support and resistance levels are. The higher or the bigger the VPA node, that indicates that there's more support or resistance here, and buyers are likely going to step in, or sellers, depending on the trend of the overall ticker. Now for my Webull users out there, we actually just got volume profile on Webull, and I think this is an absolute game changer for Webull. I think this puts it way ahead of TD Ameritrade now, not just because of the fees and the commissions, but now we have actual VPA that isn't shitty. TD Ameritrade's VPA is awful. E-Trade doesn't really have it. But how we get that is we go up here to indicators, drop this down, and it's the VP tab. You have to have the latest update of Webull in order for this to occur. Not only is VPA something I use every day, but I think is the most versatile indicator there is available. And that is why, it's my favorite indicator, because there's so many different ways I can use it. And also I can look for where price can move faster and help me determine between certain tickers for that day. Let's look at AMD here, for instance. Got nice volume profile on the downside and the upside if we can crack 75. Like that play a lot. If I look here on the daily, similar to support and resistance, higher time frame VPAs can come and be more helpful just because they do mean more. So if I have big zones here like we do with AMD, I notice that price can move faster in this zone here, but probably going to move slower on this top side because we have more volume, and sellers are more likely to step in here as this was previous support now turned into resistance. It also can help me with timing or knowing where I should get in or out of a position. In this case, I'd love to see a retest down here in this 69 area. Not only do we have this VPA patch, but we can reference that with this previous resistance. We know in an uptrend or an actual trend flip, that resistance will then turn into support. It looks like buyers stepped in here pretty heavy around 70. See if we can retest that and push back up. If we can't and fall through, then we fall back down to our 62 level where price can move relatively fast. The main message is, all indicators can work, but price action is really the thing that moves the market. So they should help you in determining confidence, adding conviction, and they shouldn't be the sole reason why we take a position or why we think a certain way. But when used incorrectly, they honestly just hurt and make us think about way too many things instead of just looking at price action and trading off of what we can see real time right as it's happening.